Greetings, ladies and gentlemen. My name is Dr. Robert Mugo. I am an academician, a CPA, and a financial analyst. Welcome to my channel about financial literacy simplified. I want us to continue with our series about taxation. The last time we talked about tax evasion, which I told you it is an illegal mechanism that an individual or a company does trying to conceal or not to give information with an intention to defraud the government. It is illegal, it is criminal. Today, let's learn about tax avoidance. Tax avoidance is planning using the existing tax guidelines that are there to try and save yourself as an individual or as an organization a shilling. And remember, all of us are here to make more money, to reduce our expenses. Tax avoidance can be done by individuals, by companies. Though majorly, companies are the ones that do tax avoidance. Let's start with what are the various ways in which you can avoid tax. 1. Investing in government securities such as infrastructure bonds. We know that these are tax exempt. If you have money, you invest it for 5 years, this will not be taxed anything. And by the way, these infrastructure bonds are the ones that pay the highest interest rates. You can also, as an individual, engage in things like pension, like insurance companies. You have an education policy with Insurance X. You are contributing towards your pension scheme, either by your employer or you have chosen an insurance company's pension scheme. That amount that you are paying, though we shall later come and learn about the limits as to which it is tax allowable, you will reduce your tax burden. You can also register a company and transfer all the assets that you have to the company. You know it is allowed to register a sole man company where you are the only shareholder and director. By this, it means that any expense that was previously considered as personal by KRA will now be treated as a corporate expense, and this will attract a tax saving. Ile fuel ulikuwa unatumia kwa gari yako kwenda kazi, insurance, the rent that you are paying for your premises now will be recognized as a company expense and you will not pay that. You can also, as a director, don't say mimi ni director, I only draw from the company. Start earning a salary. Why do I say you start earning a salary? If as a director of that company, however big it is, remember we have companies that are very small, however big it is, when you are filing the returns, your salary will be treated as an expense. It will reduce the tax burden. Then on your part, because you are earning an income, you will be enjoying some benefits that are common for everyone. Something like personal relief. You will enjoy things like shift relief. If you are doing pension, you will enjoy pension relief. If you are doing mortgage, you have a mortgage, you will also enjoy a mortgage relief. Remember, individuals are taxed at the graduated scale rate 10, 25, 30%. As a company, company taxation starts at 30%. It will save you a lot. You can also, as a company, now this one depends on a middle-sized company, list in the Nairobi Securities Exchange. If you list in the NSE, you will save tax, you will be exempted from taxation. Most of your income tax will not be taxed to the extent of up to 10 years. We are saving. You can also invest in EPZs. Munasikianga place inaitwanga EPZ, Export Processing Zones. If you invest in EPZs, the government encourages people to export because we are a net importer. You will not be taxed. Companies that are also large to some extent do what they call tax shifting through transfer pricing. You are operating in 2 countries or 3 countries. Country A, where the tax is very high, you only produce. The cost there is given a tax. Cost of production is tax allowable. You don't pay tax for that. The country where the tax is very friendly, that's where you go and sell. You save that. You can also, as a company, when you are charging depreciation, you use the recommended rates for depreciation. What do I mean by this? A car is allowed to be depreciated 4 years. In taxation, we claim something called tax allowance. So when you depreciate that car for 4 years, you will enjoy the tax allowance benefit for 1 million if the value of the car was 1 million. There are so many ways that as an individual or a company can enjoy in terms of tax avoidance. But for today, let me stop at that. Go to my YouTube, TikTok, Instagram, Facebook. Let's learn more about financial literacy simplified. Enjoy your weekend.